you want to outperform Bitcoin. You want to take some additional risk and you want to hit a big home run. So you invest your money in a Bitcoin Treasury company, which is the latest trend happening in Wall Street. But you need to understand that not everything that shines is Bitcoin in this case, not even gold. And there is some risk that you're absorbing by venturing into this kind of company. So today, let's talk about what they are, how they operate, and the risks that you should be aware of. Thank you for joining me to another episode. As I mentioned, today, let's talk a little bit about Bitcoin Treasury companies. So let's go back to 2020. You need to understand that the first company that decided to have Bitcoin in their balance sheet, in their treasury reserves, was MicroStrategy, led by Michael Saylor. Ever since 2020, they have been consistently accumulating more Bitcoin in their treasury. And that was with the whole mentality of cash is trash and Bitcoin is the best asset that will outperform everything else. So far, it has turned out to be the case. But you need to understand that the way in which this has turned into now a plethora of companies issuing debt, issuing stock, issuing different mechanisms to accumulate Bitcoin is something that may turn into a black swan down the road, may turn ugly down the road. And as I've been telling you in the past, basically also represents some risk, because in this case, unlike Bitcoin, which is a bearing asset or a bearer asset with no counterparty risk, in any company that is public, that has a CEO, that has certain strategy, that has debt, that is risk that you're taking. So what happened? Basically, Michael Saylor and Strategy started issuing some debt, some convertible notes to accumulate Bitcoin. They had some cash that basically they turned into Bitcoin acquisitions. They did that systematically throughout the bear market, even when Bitcoin was around the $20,000 or $16,000. And they have become the largest treasury company in the world right now, holding over 600,000 Bitcoins, which accounts for about 3% of the total supply. So starting 2024, as the ETFs that back up Bitcoin, like IBIT from BlackRock, have become more popular, have done great. And as there is a little bit more adoption and embracement of crypto assets and Bitcoin in particular from pension funds, from companies, from the government, there are companies that in fact see this opportunity and say, hey, I want to get into that. And that's great. I think that is only expected when you have a pristine asset with absolute scarcity and adoption that is going higher. But the risk here is that not every Bitcoin treasury is built the same. And I'll show you in a minute kind of the standings of Bitcoin companies, but you need to understand that there have been different mechanisms that these companies have used to raise capital and to accumulate Bitcoin. So as I mentioned, in the case of Strategy, they started with some convertible notes, basically issuing debt. They also converted some cash that they had in their reserves to just purchase straight up Bitcoin. But lately, in fact, since November of 2024, they have been issuing these new preferred stocks. So new stocks that are available for any brokerage to and trader to operate with different characteristics. But the purpose of these preferred stocks is to have vehicles that enable Strategy to accumulate more Bitcoin. And those vehicles may be attractive for people that don't care about Bitcoin. They care more about some US yield or dividend. That's great. The whole idea is those dollars, those dividends are part of those instruments, but whatever capital is raised from those is part towards accumulating more Bitcoin for their main shareholders and their main stock or common stock, as it is called. So you have preferred stocks, you have convertible notes, which is basically debt at the end of the day. You also have basically ATMs or at the market offerings. What is an at the market offer is basically the company saying, well, I will issue more shares to the market at market price and whatever I raise from that capital, I will use towards buying Bitcoin. So think about it from the perspective of a shareholder. If a company is issuing more shares, typically that will translate into dilution. Why? Because if I'm getting more shares with the same company value, then I'm getting diluted and my share is worth less. Now, the trick that these companies have been using is, well, not really, because yes, there are more shares, but since we're repurposing whatever we raise towards buying Bitcoin immediately, if Bitcoin raises in price, basically you will all benefit from it. And no matter whether you got in late or early, every shareholder benefits from this acquisition. And basically your dilution is not really a dilution because you're getting more Bitcoin per share. The company owns more Bitcoin. So now, yes, there are more shares, but if we are strategic in our purchases, we should be getting you more Bitcoin. And therefore, if Bitcoin goes up, your investment should go up. That's all great. But the problem is that works beautifully when Bitcoin is going up, because yes, you have a company that bought at a lower price. They basically gave a BTC or a Bitcoin yield to their shareholders. And if Bitcoin rises in price, basically every shareholder will see their stock price also go up in theory. The reality is that the same applies on the other way, which is if Bitcoin goes down, then every shareholder will suffer the pain of a levered play on Bitcoin going basically south. And that means, again, that is one of the risks that you should know in these companies. You're not dealing with a pristine asset. You're dealing with a company that has a CEO, that has a strategy, that has a marketing department, and ultimately has also credibility about their long-term strategy for accumulating and preserving Bitcoin. That is what I fear will be one of the most dangerous territories as we enter a bear market in the coming years, because when a company struggles for keeping their operations, for keeping going, you need to understand which company is going to end up selling their Bitcoin to keep funding their operation. And that, I think, can turn into a potential black swan if you're not careful and if this has a ripple effect. Now, CEOs like Michael Saylor, they are Bitcoin maxis, they are all into Bitcoin, and those CEOs that have structured their entire company around Bitcoin, I don't think will have an issue, or at least I don't think they will have a credibility issue or be forced to sell Bitcoin. But again, when financials hit certain numbers and certain thresholds, it can happen. Everything can happen. So one thing that these companies are also evaluated or measured lately has to do with this metric or this KPI called MNAV. MNAV is essentially multiple on net asset value. So if the net asset of the business is certain real estate, certain operating business, and then the treasury of Bitcoin that holds X thousands Bitcoins or whatever, that price at current market value will be worth a certain number. Well, if you see the stock trading at a price that, if you combine all the stocks and the market capitalization of that enterprise and the price is higher than their assets, that's completely understandable for a company, an operating company that is having costs to run and is having some promise of growth. But basically that multiple of net asset value is what has been driving how much of a premium the company is running versus their underlying assets, in this case, Bitcoin. So considering that, let's go to the computer and let me show you how these companies are basically accumulating Bitcoin, who's who, and where is the most risk here. Okay, so right here I have popped up a page called bitcointreasuries.net. It keeps a accurate, updated list of the top 100 companies that hold Bitcoin. And first thing that I want you to see is how in the number one position we have Strategy. And Strategy has 629,376 Bitcoins, which is more than 10 times the amount of Bitcoin that the next largest treasury company has. In this case, it's a company that is mining Bitcoin. Their business is to mine Bitcoin, and they're Mara Holdings. So you can start seeing how disproportionate some of these numbers are. The top, let's say, 10 or 12 companies have tens of thousands of Bitcoins, whereas the next 87 or so have less than 10,000 Bitcoins each. Now, the other thing that you need to understand is take a look at the core business of these companies. As I mentioned, in the case of Strategy, right now they're a Bitcoin treasury company, the largest in the world. In the case of Mara Holdings, they're a mining company. In the case of 21, they are a Bitcoin treasury company that, again, they're completely focused on accumulating more Bitcoin. But as you start getting down on the list, you see Metaplanet, which they are a Japanese company, but these were hotel owners. And basically, this was a company that was not known by anyone in the crypto space until they started their Bitcoin strategy. Now, still, the fact that they are the largest public company in Japan that can hold Bitcoin and that can accumulate resources to get Bitcoin makes it very attractive. But for instance, I don't know if their core business right now is purely Bitcoin, or if hotels and tourism and the economy on that regard taking a hit will push them towards selling Bitcoin, which is part of the risks that I'm talking about. You see number 8, this is Trump Media and Technology Group. Do you think that they are Bitcoin maximalists, that they won't sell Bitcoin ever? I don't know. If you go down the list, there is Tesla. So Tesla has not sold any Bitcoin yet. They have a large stack of 11,000 Bitcoins. But if the automobile industry again struggles, if Elon Musk wants to pivot to some new enterprise and needs capital, don't you think that they could tap into that to fund their ventures? I don't know. So that's where you need to be careful about who is a good CEO, what is a good company, what is a strategy that you're aligned with for these kinds of companies. And even if you're aligned in the strategy, you need to understand that you're taking counterparty risk and you're taking a levered play on Bitcoin. There can always be ups and downs, and the ups are great, the downs are terrible. So in any case, if you decide to do your research and go into this kind of company, Bitcoin treasury companies, I will encourage you to do your own research. Once again, this is not financial advice. This is only for you to understand that not every Bitcoin treasury company is built equally, and that no matter which company you choose, if you choose to go down this path, you are dealing with a CEO, a strategy of accumulation, a strategy of debt, a strategy of risk, and that is something that is great for Bitcoin as far as adoption, as far as Wall Street getting more embracement and more capital flowing into Bitcoin. But everything that goes up must go down. Please be careful with these companies. I will try to make an effort to tell you updates about how they're performing. But until the next one, please like, share, and subscribe. And I'll see you on the next one. Bye.